Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is relatively quiet due to the build-up to tomorrow's jobs report. However, the unemployment claims report being released out of the USA at 3:30 South African Standard Time should create some movement within our USD pairs.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar climbed to a 3-month high yesterday after Federal Reserve Chair Jerome Powell guided towards a higher terminal rate than previously expected on the first day of his testimony before US Congress. The US dollar index traded 0.1% higher at 105.705, having earlier climbed to its highest level in 3 months at 105.868. Powell went in front of the Senate Banking Committee and said that recent US inflation and job data had been stronger than expected, and thus interest rates would likely have to increase by more than had seemed likely previously. In South Africa, business sentiment declined to a 2-year low in the first quarter as severe power outages, also known as load shedding, had dilapidated logistic networks and hobbled economic activity. A quarterly business confidence index compiled by First Rand Merchant Bank and Stellenbosch University's Bureau of Economic Research fell to 36 in the 3 months through March from a 38 in the prior quarter. That's the lowest level in the RMB BER Business Confidence Index since the first quarter of 2021, when executives were concerned about the fragile nature of South Africa's recovery from damages brought on by the COVID-19 pandemic. Having a look at our analysis today on GBP USD, we can see here that GBP USD has entered into a bearish flag correction pattern. GBP USD could potentially, before tomorrow's NFP report, come back to retest that primary resistance level at 1.19. However, should this bearish flag pattern be broken during trade today, we could see this pair sell off prior to the NFP report all the way back down to that next support level at 1.165. Now let's move over and see what's making headlines on Wall Street. The S&P 500 index closed slightly higher while the Dow Jones dipped as traders grappled with mixed messages from the Federal Reserve Chair Jerome Powell and US economic data ahead of upcoming labor and inflation reports that are expected to determine the central bank's future rate hiking path. Stocks had fallen more than 1% on Tuesday after Powell's comments led traders to dramatically increase bets on a 50 basis point hike in March, compared to the previously widely held expectations for a 25 point hike before Powell spoke. Data released yesterday, however, did little to ease concerns about higher interest rate hikes, as it showed that the US private payrolls increased more than expected in February. Having a look at our analysis on the US 500, also known as the S&P 500, we can see that for the last day we have been hovering just below that primary resistance level at 4,000. Very similar to GBP USD, we have also entered into a small consolidation pattern, also known as a bearish rectangle. Should this rectangle be broken and we could see a close outside of this pattern, we could see this specific instrument sell all the way down to that next primary support level at 3,920. Now let's move over to commodities. Crude prices fell for a second day in a row as supportive US inventory data was cancelled out by the Federal Reserve Chair Jerome Powell's testimony to Congress, which continued to spook traders worried about the intensity of ongoing rate hikes. US crude inventories fell by 1.694 million barrels last week for the first weekly drop since December, after 10 straight weeks of builds that added to a sum of 60 million barrels to the inventories. Market's attention, however, was more on Powell, where the Fed chair, in a second day of testimony before Congress, indicated the central bank would, if needed, raise rates higher than previously anticipated. Having a look at our analysis on crude oil today, we can see that yesterday we broke that first resistance level, also known as our diagonal resistance level or trend line. We are currently hovering just inside of that support zone at the moment, and should that zone be broken and we could get a close around that $76.3 to the barrel level, we could see this specific instrument sell all the way back down to our next support level around that $74 a barrel level, or even further to our primary support at $72 a barrel. Gold prices are hovering just above their weakest level this year amid continued concerns over rising US interest rates, with focus turning to the upcoming labor data to further gauge the potential for more rate hikes. Focus now turns to the non-farm payroll data due tomorrow, with any more signs of labor strength giving the Fed more impetus to hike rates. Looking at our analysis on gold, we can see that over the last day or so, we have really just hovered above that primary support level. So before entering into any additional trades on this specific instrument, I will personally be waiting for either a break below that primary support level or cues that shows that this specific pair could rally again back up to those higher resistance levels.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.